Hey guys, welcome to the daily analysis for March 25th. It is a Monday today, so of course the market's just kind of getting set up for the week. And so going along with kind of the new style of the daily analysis that we talked about, I'll be covering some of the immediate setups first, going over those, and then just doing some more basic analysis on the major pairs toward the end of the daily analysis. So I've got some requests to cover different pairs. I'll try to get into all the pairs that people want to cover without having an hour-long boring analysis. So that's the goal, and you guys can give me feedback along the way so that eventually the analysis is, the best product, so to speak, that it can be. Okay, guys, so we'll get into that. First, we'll cover our news, and then we'll jump back into the charts and get into all the pairs, trade setups, and the analysis that we want to cover today. Alright guys, tomorrow is Tuesday and we do have some red tagged events. A couple things to note. First of all, Japanese news is that Bank of Japan governor is speaking, so you'll want to pay attention to that. That's listed as a tentative event, so there's not a time on that right now. Australian news is coming out basically in the middle of the night in my time, in the Eastern time, 12:45 a.m., and that is another bank announcement. So another one that could really affect currencies, of course, when national banks are speaking. That has a pretty large amount of weight in terms of that currency's strength or weakness or dependability or whatever the case is that they're speaking about. And so those two bank announcements are certainly ones that we'll want to pay attention to. Even if we're not trading it, for instance, I won't be up trading that, but I want to check in and see what the effects are of that as kind of a way to gauge the market, and certainly want to pay attention when banks are speaking. Alright guys, and then as far as news that really affects my trading time, that will be the 8:30 a.m. US dollar red tagged event, the 9 a.m. Later news, which I don't pay a lot of attention to, but then the 10 a.m. Red tagged event, consumer confidence, new home sales. So between 8:30 and 10, that hour and a half, pretty good amount of US dollar news should help shape the US dollar direction for the week, and those will be announcements that I pay more close attention to, I guess would be the way to say that, more close attention to than the other announcements that you see here, although the other stuff again is pretty important too. You see that 8 p.m. is New Zealand, and that's a business confidence meeting, so another one that could have an effect as it is red tagged. Okay guys, so that's your news for March 26th. Again, that's tomorrow, Tuesday. And pretty decent amount of news for Tuesday. So keep your eyes open and make sure that you're watching those announcements and comparing them to these candles that are painted on your charts. Alright guys, then just to quickly cover our terms, the daily analysis is for educational purposes only. We're not registered by any authority, and we are not trying to give you investment advice. We're only trying to give you our opinion of the market. Alright, because of the regulations that are put in place, it's very important that you guys understand that. And if you need to pause the video and read through all of those, please do so. Alright guys, so as far as trade setups, the Euro Pound is one that's of interest to me. And it does depend on, if you could catch this on a smaller time frame and exactly what the circumstances will be as we move forward, which of course I don't know what they'll be. But you can see that the Euro Pound had this base here, not a huge base, but a little bar base, and faked like it was going to be a big move to the upside from that area, possibly back into the zone here, right below 86. At least early in the day, with that Euro burst, it certainly looked like that was what's going to happen. Now, as we're coming closer to the finish, you see that's actually a push lower, back closer to the 84 area. Now, this is the 50 fib level at the top of the zone here that you see I have highlighted. And the 50, if you look back in history, from the swing that I have drawn on the weekly level, is not a massive level as far as historic price. Now, there is some areas there on the 50 fib, but the main thing about it is that it's that Fibonacci level. A lot of times you have fibs that are in combination with a lot of historic price, like for instance this level, which is a 38.2, is also in combination with a ton of support and resistance, and so this is actually a more major level. But the 50 level in itself is going to act as some support. It might fight through it, but it's going to act as some support. So I would have that on my radar, but ideally the 38.2 down here around 83 would be the ultimate target for a Euro Pound short, in my opinion. And so a few different ways to tackle this as a potential trade setup. One would be to get on this with maybe an intraday trade, perhaps an hourly close. If there's some kind of retest of this area and then a continuation, getting a tight stop loss and just targeting this next 50 fib level would be a great trade opportunity. Perhaps a 2-to-1 or even 3-to-1 if you caught it on a smaller time frame. Now a different way to approach this trade would actually be to ignore this level, not ignore it as in the trade management side, but ignore it as a target area and target this level. You could use the 50 as perhaps a place where you lock in price or something like that. But as far as targeting, you'd use more of the 83 zone and probably a bigger stop loss. The strategy here, of course, would be to to give price room and patience to see if it would actually break through this level and continue the reversal move to a lower price and therefore have a bigger reward. Now, if you caught this trade on an hourly time frame or something lower like that, it'd be very unlikely that price is not going to shake you out before it would get down to here, which is why typically you're going to have a bigger stop loss. So as for me, what I would do in this situation, I would weigh the pros and cons. If there was a nice hourly setup, I would go ahead and use this as my target and get into the trade, because there's no benefit of using a wider stop loss and getting a target down here with the same risk to reward. This is a higher probability trade, a faster trade. It just makes a lot more sense if you can get the entry. If there is no entry, maybe we get a daily close even lower, but there's no really good intraday entry, then you're stuck with probably putting a stop loss above the 85 area with some room and targeting this area down here just because that's really the only setup that you have. So if you believe that the euro pound is heading down and you want to take the trade, but there is no intraday setup, then you're probably looking at a more long-term setup targeting down toward the 83 area rather than the smaller target that's more right in front of us here. And so it really depends on what your style is, what the circumstances of the market are, and what all those things combine to tell you about the market. Ideally, for me personally, I'd like to get in on a smaller time frame and just target the top of this 50 area, basically 84.25 would be my target. And try to get out of the trade pretty quick and still get a 2-to-1 or maybe even a higher risk-to-reward ratio. That would be ideal for me, but as you know, if you've been trading Forex for any amount of time, typically the ideal situations don't occur in real market conditions. And so this is an example where you really have to wait and react to the market and then take the best opportunity that presents itself. And that might be a longer time frame trade with actually ignoring this level as a target and targeting this level. And when I say ignore, please understand that I don't mean ignoring this as a level in the market. I only mean skipping it in terms of targeting and actually playing maybe a test of this area and an eventual break to the next area, and assuming that you're not going to get a bounce and a continuation. To me, at this point in time, it looks like this would have a pretty high probability to eventually break through this level and head to our next one. But putting all your eggs in one basket, so to speak, is not a good idea when the 50 Fibonacci level of a weekly move is right in front of you. Okay, so a lot of things to weigh there on the euro pound, and the reason I'm spending so much time on the euro pound trade setup in particular is because it's a Monday and there's not a lot of other trade setups to go over. And so I'm feeling a little free to kind of go over and go into some very detailed explanation on that. I hope you don't mind, but there's really not a lot of setups to go over because it's a Monday, and so most of the the rest of the video is just going to be some basic analysis. And so I wanted to give you a lot of detail on one potential trade setup, which is this euro pound, and some different ways to look at that. All right, guys, so if you have any feedback on that euro pound setup, feel free to leave a comment. Let me know what you're thinking. To me, it looks very bearish. The fake today was a sign that momentum, has shifted back. It got some sellers out of the market, perhaps, and momentum has shifted back to the downside, looking like it really does want to continue down into some lower areas. All right, guys, so again, euro pound, that's the daily view that you're looking at right now, and I think some very potential trade setups on different time frames, again, just depending on the circumstances that we get in the market tomorrow. All right, and on the trade setup side of things, this is actually the only other trade setup I'm going to go over today. And it's kind of an interesting one, not your typical trade setup that you'd hear from me, but but I think there's some really good potential here, especially again on the intraday if you're watching the charts tomorrow. And what we have here is the USD CAD really fighting with this level in here, also fighting with the base level that's sitting at now, and this trend line. So we're kind of in a channel, and if you know me, I'm not a big fan of trading channels. However, there is one high probability potential that I see on the USD CAD that could very well be taken advantage of, again with some intraday momentum. And the reason that I say that is because this base here, and the channel and the wedge and the confusion and all the stuff that we have going on here is not pretty. But what it has led to is price continuing to come up into this area over and over and over again. And so if you see how many bars of the past, several weeks, how many bars have touched this middle zone, it's a pretty astronomical number, yet nothing has come below the current price that we're at now. And so if the momentum does pick up, and you can see, the end of the day closed a little more bullish, if the momentum picks up tomorrow heading this way, any buys into this zone would seem extremely high probability trades. Now again, this is a situation where you'd have to get a stop loss in order and still set yourself up with a positive risk reward ratio, which is not always easy on these intraday trades, especially when the USD CAD moves so little. However, if you can find that opportunity for watching the charts and it sets up in that direction, this is just such an obvious target area that it's hard to pass this up as a potential trade opportunity. And so that's something that I'm looking very closely at. Again, it's not a typical trade setup. Not everything is typical, not everything meets your ideal trade setup, but when there's high probability potential in the market, you don't want to ignore that. Another thing to keep in mind is that we have a little bit of a falling wedge here. So even though that that momentum heading up in that direction to me is a high probability trade setup, you don't want to ignore the fact that it could continue down in this falling wedge, which is why you really need to see momentum in order to get long in this pair. If there's not momentum there, it's just kind of gradually moving sideways, that's probably a trade you do not want to touch. It's only if it's showing momentum back in toward that area that you would want to get in long and use that as a high probability target. Okay, so that's USD CAD. Again, I think just a really good zone to take advantage of while price is in a channel there. Even though it's not really something that I typically look at in this instance, it's just providing itself with a good opportunity. Alright guys, so now we're going to move into the analysis portion here. The pairs I'll be covering are not pairs that I really have a great trade setup that I think is coming soon, although some of them might be a few days, but I'm talking about pretty immediate trade setups. These are more pairs that I'm waiting for things to happen and things to develop. So for instance, the euro dollar bouncing between these levels as we talked about today, touched both levels as a matter of fact, with pretty incredible movement, and so right now we're stuck in between these two levels. Trading to the upside off this level into this area, in my opinion, is a little tricky. You can see that the bouncing around. Maybe if you took a buy here, you would have made a great trade because it spiked up earlier today. But that's kind of a lock move with all the channeling here. So really what you probably want to wait for as a euro dollar trader is for it to get out between these two zones here, to either make a sell on the break here, or a buy on the break here, and actually not take any trades in between these two levels, as right now it's kind of a no man's land chop fest. And so that's a little bit difficult, and it's why I say there's no really immediate trade setup. We needed to make a clear break, perhaps pull back, show continuation before we really get a trade. The same thing to the upside. You want to get a break, a retest, a continuation before taking a trade. Now, this does not have to happen on a daily chart, in my opinion. This could happen on an hourly or a 4-hour. But the principle is the same, that you want to see the zone broken. You don't want to be caught in the middle around this 1-3 area. And you can see that, even back in the past, it's a little bit of a choppy, tricky area. You take a trade here, maybe it's going, you get a pin back to the bar. It still bounces, but just a little bit of tricky trading because of all the chopping back and forth. And to me, that's something that I want to avoid, which is why that USD CAD example that I showed you is such a rarity for me that I don't typically suggest, because for the most part, I want markets that are trading pretty deliberately and heading in a pretty deliberate direction. And the euro dollar is doing that overall. Overall, still very deliberate as it's setting down. But currently, on the in the smaller scope, we're in a very choppy, indecisive moment here between these two zones, which we need to wait for it to escape, in my opinion, before really high-quality trades are going to be available to us. Alright guys, next I want to look at the Euro-Yen. I had some requests to take a look at the Euro-Yen, so I want to make sure I do that. And just to give you guys an idea of why I typically don't cover the Euro-Yen in the analysis, is because I get that information from the US Yen and the Euro Dollar. So, I know based on what the US Yen and what the Euro Dollar is doing, what the euro yen is doing. And so if the US yen is skyrocketing, and the euro dollar is crashing, then I know that really that's happening because of yen and euro, or excuse me, that's happening because of yen and dollar, and so I don't really need to check out the euro yen in that situation. Now, if the euro dollar is going way up and the US yen is going way up at the same time, then that really makes me want to take a look at the euro yen, because there should be some very interesting things happening there. So, don't get confused by that, the correlation stuff, if you're not really confident with that. But just wanted to explain why I'm typically not looking at the euro yen on a regular basis. It's just because I draw the information that's happening on the euro yen from the combination of the US yen and the euro dollar. Alright, so if you need some clarification on what that all means, just leave a comment. I can do a more in-depth clarification on that. But for now, just wanted to give you that quick explanation. When we're looking at the euro yen right now, from a technical standpoint, there's a pretty interesting dynamic. We had this wedge that was forming here, actually a really great wedge pattern here until this huge breakout happened and all the confusion, but it was a really nice tight wedge that was forming. And what's interesting is that now you can see after the breakout, after the move, it's kind of coming back into play as these were riding on the top, and then this came right to the bottom of this area. Now, I'm not saying that this is necessarily a really strong area, but it is interesting how these broken areas often come back and are, then again used later on in the market. And so when it comes to looking at the euro yen, it's in a pretty nice support area. The top of these levels, the wedge pattern that I just showed you there, the bottoms here, this is a pretty good area where you might expect price to bounce back into these levels. And so because all these levels are kind of corresponded in the same area, you have gaps here, back and forth here, a fake out to the upside here, and a close lower here. There's a lot of conflicting information, and so it pretty much ends up being something like the euro dollar, where you want to see some clear, strong direction. By the way, there's another trend line that I didn't even draw here, pretty obvious trend line that I didn't even think to draw here, that also provides this as a very bullish area. And so when you look at all the evidence here, let me draw this with a permanent line. When you look at all the evidence here, it makes sense that there's going to be a bullish bounce. I would not be surprised at all if we got a quite bullish bounce on the euro yen tomorrow, and you can already see that it started today. But the issue is that there's not a clear target. 122.3 or 122.30 is a pretty obvious target, but this is a situation, again, where unless you can somehow find a way to really get a precise entry, it's going to be difficult to get any profit potential on that trade. So with that being somewhat potential, what you really want to see on the euro yen is for all of this consolidation, in this whole area here, this major wedge here, to get out of that area and to either make a clear break, a longer term break where you can make a 500 pip target to the downside, or the opposite, where it goes up. 27 will be an obvious target if it gets above this wedge, and then if it breaks through that area and continues upward, who knows what the limits are to the upside. So what I consider the euro yen right now is a lot of little small stuff going on, but the overall theme that I'm seeing would be characterized by this black wedge that I just drew and a breakout and continuation of that major wedge. And so I hope I'm not complicating things. I just want to try to cover all the little ins and outs, but still give you the overall picture. And to me, the overall picture is this wedge pattern here, and the potential that this could be a just big consolidation period before our next burst to the upside. To me, that is the overwhelming potential on the euro yen, though nothing has been proven yet until we break out of that and show continuation to the upside. Alright guys, that's my analysis for the euro yen. Those of you who requested the euro yen, I would love your feedback and maybe even some more instruction on what you'd like to go over in terms of the euro yen. If you're thinking that that's good, but you need to know what target areas I think to the upside, or what target areas to the downside. If you want more information, just leave a comment, and that way I can better serve your need. Okay guys, pound yen is the next one. By the way, same exact thing. I get my information by the pound dollar and the US yen. If I see something within those two pairs that leads me to check out the pound yen, I'll do that. But I don't check out the pound yen just for the sake of seeing the chart. Again, because I know what's going on, for the most part with the correlation, and based on that I can decide if there's something I really need to look at within the pound yen chart specifically. So just another clarification on that. Same situation as the euro yen. With the pound yen, we have a pretty tight consolidation between 145 area and the 142 area until something happens here, whether that's a breakdown or a break to the upside. To the upside, we have a top here, obvious target, which is nice to have an obvious target. To the downside, pretty obvious target as well. So the pound yen has some trade potential. Certainly obvious targets make trading a lot easier. Just a matter of when we get the breakout and and how much momentum there is. Again, the circumstances with where you get a stop loss, where you get a an entry, all that stuff is very important. But it's a matter of breaking out of this area first and looking to identify movement toward one of these two targets, depending on the bearish or bullishness of the break. Okay, guys, so that's pound yen. Good channel there, and hopefully the break will be coming any day for us. Alright guys, same old story with the odd US. We know that this was a great level for a bounce, and we know that we got that bounce, and we know that price has continued up nicely. Another thing that we know that I've really hammered is that because of the choppiness of the sideways market, there's tons of minor levels in between here that I have not taken the time to draw out. Because quite frankly, I'd have a level every 3 pips. So you could pretty much anywhere where price has been, you could just draw a line across it, right? And what are you going to find? You're going to find areas where there's support and resistance on that level. So because of that, the odd is a pretty tricky pair to trade on any kind of lower time frame where you'd be worried about shakeouts, because all these levels can provide bouncing areas. Those of you who got in down here on a daily and had maybe a stop loss in the middle of this area or something, hopefully you're still doing great on this trade. Hopefully you're still in it. I'm kicking myself for not lasting long enough in this trade. But maybe you're doing a type of trailing where you're staying in this trade. I hope that there's some of you who are following the daily analysis who are still in this and have managed to trade better than I have. But right now, the issue is that there's not really a lot of trade potential in the middle of the sideways market. You almost have to get in at the bottom or get in at the top, because in between it's very difficult to find a good entry. And so, unfortunately, that means I got it. I got out of the trade all the way down here or something, in this range. And so I've just been watching it go up without ever having a great opportunity to re-enter, and that's frustrating. But really, with the odd, because of this situation, again, I think it's probably best to to hold off until you get a really good entry, because this stuff in between here can just create so many shakeouts and bounces along the way. I mean, you can see what some of these moves have looked like. This one had so much back and forth. It takes the most patient trader in the world to get the whole move, but of course it's worth it when you cash out the profit at the end of the trade. And so that's really what you have to do in the sideways market with it, especially when there's slow movement like there is in the odd. Alright guys, and that about does it for the daily analysis today. Again, please do feel free to give me any feedback on the analysis. Anything that you would like to cover, anything that needs improved. Hopefully just the analysis portion is not too boring. If you want me to go into more detail on stuff, you want me to go into less detail on stuff, I really just want to leave it open to getting feedback so that the analysis can be as best as it possibly can be, and I can only do that if I know what you guys want. So use that comment section. If you like what you're hearing on the daily analysis, share it on Facebook and tweet it on Twitter and all that stuff. And I would greatly appreciate that. Alright guys, I'll talk to you tomorrow.